Good afternoon. We want to thank you for taking the time today to meet with us. We want to definitely welcome you to this session of Integrity Data's ACA Summer Educational Series. We recognize that your time is valuable and we thank you for joining us. I'm Shelley Austin, Customer Engagement Manager at Integrity Data. Joining me also on the call is Gary Schmidt, Customer Care Representative at Integrity Data. We will be answering questions at the end of this webinar, so please feel free to submit your questions at any time throughout the session. We have everyone on mute, but if you need any clarification, please let us know through the questions field in your GoToWebinar panel. So let's go ahead and get started. As many of you know, the Affordable Care Act has proven to be a confusing piece of legislation, especially for employers, because employer responsibilities under the ACA employer mandate are often unclear. Our 5-part 201 webinar series aims to help employers understand this employer mandate and be clear on what it means for them. Our goal in this first webinar is to help you understand the new and redefined concepts behind the ACA's employer mandate. So just to remind you, who is Integrity Data? Integrity Data provides solutions to improve business processes for payroll and human capital management, including simplifying Affordable Care Act tracking and reporting, enhancing Microsoft Dynamics GP payroll, and supporting employee financial wellness, celebrating over 20 years in business and serving over 10,000 organizations. Your people are our priority. So first, we're going to talk about applicable large employers. The ACA employer mandate only applies to U.S. organizations that are an applicable large employer, which is often called ALE. These are U.S. employers with 50 or more full-time employees and full-time equivalents on average in the previous tax year. It's likely you already know you're an ALE and the mandate applies to you. If you aren't certain, be sure to watch our 101 educational video on how to determine ALE status. You can find that video on our ACA education page, www.acafluent.com, which is also linked at the end of this slide deck. You need to be aware of the following details when determining classification. ALE status is not a once and done determination. It is actually calculated annually as part of your report to the IRS so they know each year which employers they can expect submissions from in the following year. If your company was not in existence for all of the previous year, you are still required to comply if the average headcount of the months you were in business was 50 or more full-time employees and equivalents. The law was written to deter employers from splitting a company into separate entities in order to avoid offering health insurance. Therefore, you will also have to look at the IRS rules for controlled and affiliated groups when determining ALE status. These rules are complex and sometimes confusing. Confusion stems from the fact that if you fall into this group, your corporate tax returns may be filed individually. If you have any doubts, we recommend seeking advice from an accountant or an ERISA attorney. Before we dive into more concepts, I want to quickly recap the employer mandate so we can relay the concepts back to this. Employer responsibility under the Affordable Care Act is not just about finding a suitable group health plan. There are, in fact, 2 levels of ACA compliance for employers. So the first level is the coverage mandate, offering the right coverage to the right employees at the right time. This is also referred to as pay or play rules. We'll explain that ACA concept in just a few minutes. The second level is IRS reporting requirements, documenting for these employees and the IRS that you did or did not offer what you were supposed to offer, that you did so when you were supposed to do so or not. You may hear this requirement referred to in terms of the IRS form that the Affordable Care Act created, Form 1095-C. So now the second concept. Shared responsibility is often overlooked in the Affordable Care Act. Architects of the ACA tried to use independent forces, assuming that the interplay of 2 forces working towards their own interest was the fastest way of getting everyone enrolled in health coverage. So individuals and employers have shared responsibility. This means that every individual filing a tax return must prove they had health coverage for the entire year for themselves and dependents or face a penalty. And employers who meet the ALE threshold must offer health coverage to all eligible employees or face a penalty. The third concept, pay or play rules, nicknamed for Section 4980H of the Internal Revenue Code, is a term that employers use in sorting through an ACA compliance strategy. This part of the law talks about the coverage mandate we mentioned earlier. It states you should be timely in offering health insurance of a certain quality to full-time employees, but it also notes that this is an option, so you have a choice. You can play along or pay a penalty. If you don't play, you will definitely pay. You'll have to pay either the higher sledgehammer penalty for not offering any health coverage or the lower tackhammer penalty for offering substandard health coverage. The fact is, most companies are in the play strategy and have been for a few years. Health coverage is often part of a company's compensation package that attracts quality candidates and retains current employees. However, even if you play by offering health insurance, you could face a penalty risk if the offer is not fully compliant. Then the lower tackhammer penalty is applied. We have a 101 educational video that goes into more detail around these penalties on www.acafluent.com, linked at the end of this presentation. Important to note, whatever your coverage mandate compliance choice is, you must meet the IRS obligation to report on what was or was not offered. All ACA compliance efforts center on monthly checkpoints of data. Your decisions and preparations for ACA compliance require a monthly view of your payroll and benefits data. When enforcing the employer mandate, the IRS will examine and assess penalties on a monthly basis based on what you have documented about your compliance in monthly detail on the 1095-C form. Please note that regardless of your pay or play strategy, record keeping and reporting requirements are identical. So again, for those adopting a pay strategy, that decision in no way shields you from the tedious reporting that must be submitted. An employee is eligible for health coverage when they are a full-time employee as defined by the ACA. So as you may know, the ACA has redefined full-time employee by abandoning the concept of a 40-hour work week to be classified as full-time and reducing the threshold to 30 hours a week, and by increasing the hours that need to be tracked when crediting employees with hours of service. To learn more about hours of service, please sign up for our 201 webinar on July 21st around guidelines for classifying an employee as full-time. Note that this 30-hour threshold for full-time status is limited to the ACA, so employers do not need to adjust other benefit programs that may have a different work week hour threshold in determining eligibility. So now let's talk about a qualified health plan. A qualified health plan is a major medical health insurance plan that covers all of the mandatory benefits of the Affordable Care Act. This slide provides a high-level overview of a qualified plan, which is the starting point for a qualifying offer. Let's remember that as of January 1st, 2014, most U.S. citizens and green card holders and their dependents were required to enroll in a health plan that offered at least minimum essential coverage, or pay a penalty, as you saw on the shared responsibility slide. However, at the end of 2017, the individual mandate was repealed, so starting in 2019, there will no longer be penalties for individuals who do not have a ACA qualified health insurance plan. However, this repeal does not affect employers. Employers must continue to offer an ACA qualified health insurance plan in order to avoid potential penalties even after 2018. Employers need to keep in mind that just offering minimum essential coverage is not enough for the organization to avoid coverage penalties. An employer must offer coverage that meets minimum value standards, and the coverage must be affordable in order to avoid ACA penalties. The concept of what constitutes minimum value is something a good insurance broker can explain. We will not spend a lot of time on that particular aspect. That brings us to the concept of affordability as defined by the ACA. This is the exact wording from the final regulation issued by the IRS on February 12, 2014. Coverage for an employee under an eligible employer-sponsored plan is affordable if the employee's required contribution for self-only coverage does not exceed 9.5%, which has now been increased to 9.56% for 2018, of the taxpayer's household income for the taxable year. Notice that it ties affordability to the employee's household income for the taxable year, as reported on their individual tax return. Of course, employees do not give you their 1040s to make this determination, so you as their employer cannot use that information to determine affordability. Therefore, the law has provided a means of establishing safe harbors. This allows the employer to determine what is affordable based on the information they do have, their employees' compensation. Using those safe harbors to determine affordability is critical in minimizing penalty risk if you have lower wage workers. You know each of your full-time employees' compensation. Now you can choose from 3 safe harbors when applying the affordability percentage. The affordability percentage is 9.69% for tax year 2017 and 9.56% for tax year 2018. Safe harbors establish maximums not to exceed. Safe harbors can differ by employee type, job function, department, or physical location. Once a safe harbor is established for the year, it cannot be changed until the plan renewal of the following year. This is just one of many webinars that cover the Affordable Care Act. We want you to have access to all of our educational resources, which are available at www.acafluent.com. You can watch our 101 educational videos that cover whether you have to comply, how to comply, and penalty details. Also, each video from the 201 educational series will be available for on-demand viewing. You can download our ebook, Employer Essentials for IRS Reporting, and our printable infographic ACA checklist for 2018 reporting. Our website allows you to quickly link to IRS resources to hear it straight from the source, and access our blog feed as it continually updates with new hot topics. Here are the upcoming webinar topics and dates. Don't forget to register at www.integrity-data.com/ACA-201. Be sure to visit the page after each session for previous recordings and slide decks. For more information about our solution offerings, you can also visit integrity-data.com/ACA. We want to definitely thank you for joining us today. Again, we recognize that you could be doing many other things, but we are extremely happy that you chose to spend the time with us. The video of this webinar will be available on Integrity Data website within 24 hours. Thank you again for joining us, and we hope you found this presentation informative. Please let us know if you need anything further. Thanks. See you soon.